Hello and welcome to Star USA Training. Today is Tuesday, June 7th, and we'll be talking about the USMCA Free Trade Agreement. We are recording the webinar. The slides I'm recording and any other materials will be made available after the broadcast later on this week. All participants are currently muted, but please do use the question and answer feature of the webinar software. We'll have time for questions at the end. And this webinar is eligible for one CES credit. Email train@starusa.org after the session with your ID number, and we'll get you those credits. So today we'll be digging into some of the practical aspects of USMCA. Like with everything else in this field of trade compliance, that's going to begin with having that proper foundation and understanding of what the program is, how it works, and then using that understanding to build out a workable plan of action that we can put into motion in our own organizations. And then lastly, at the end, it's nice to know where to go to get help. So we'll touch on that in that part 3. And before we dive in, I do want to make a quick note that my slides are wordy on purpose. Whenever I attend seminars, I very much prefer having slides that I can refer back to that have useful information on them. So since we make our materials available after each session, I want you to be able to get value from those the next time around as well. And I've also only got an hour, so there's a lot to cover. I do tend to talk very quickly, so if you're happy to watch this back over on YouTube, feel free to slow me down to half speed. I won't take it personally. Okay, some quick background. My name is Mike Easton. I have my customs broker's license, and I've been in the international trade compliance field for more than 15 years. During that time, I've worked with clients pretty much every scope and size across most industries. Star USA is a trade compliance consulting, advice, training, and services firm. We handle in and outsourced operations, import and export policies and procedures, development and implementation, audits, things like HTS classification, determination of origin, proper values. And we do handle free trade grant programs for more than 15 companies, full gamut. We do also provide training in all areas of trade compliance. If you want to find out about more about us, either visit our website, starusa.org, or email us at train@starusa.org. Okay, part 1. In this first part, we'll be talking about the agreement, clarifying what the term originating means, looking at some of the key roles that are defined in the USMCA, and how the role of the HTS fits into the USMCA. And then we'll look at a contrast between the USMCA and the legacy NAFTA program. I will be citing my sources. They'll be in the bottom left corner for your reference, and then they'll be summarized again at the end of the presentation, which again, you will have a copy of after this session. Okay, so the United States-Mexico-Canada Agreement establishes the parameters for free and reduced duty when trading originating goods between the member countries of US, Canada, and Mexico. USMCA has multiple names. It's important to be aware that different companies, different organizations in different countries will refer to it by a different name. Here in the US, we call it USMCA, sometimes NAFTA 2.0 or New NAFTA. In Canada, they call it CUSMA, which is Canada-US-Mexico Agreement. And in Mexico, they call it the TMEC. USMCA entered into force almost a year ago on July the 1st, 2020. Renewal is not set until 6 years after the date of renewal, which will be July 1st, 2026. And at that renewal period, they have the option to extend it for an additional 16 years, or if they choose not to renew the agreement, then they will meet each year to potentially renew it. And if they elect not to renew it at all, then it will expire on the 30th of June, 2036. That's kind of the baseline of how long we can expect this to be in play for the next 16 years. One of the key concepts that I see, particularly people that are new to the industry and new to the concept of USMCA struggle with, is the concept of origination. And one of the conflating factors there is the fact that there are multiple ways to define origin or originating. And there's a definition in the Code of Federal Regulations, the CFR, defined by Customs and Border Protection. They define the term country of origin to mean the country of manufacture, production, or growth of any article of foreign origin entering the United States. Further work or material added to an article must affect a substantial transformation in order to render such other country the country of origin. And this is codified as part of the import process. It is an extremely relevant aspect for country of origin marking upon importation, but it has no bearing, no direct bearing on the USMCA term originating. That's defined separately under USMCA Chapter 4, Rules of Origin. And we'll look at some of the ways that we can identify how to achieve the originating status under USMCA. But it's important to note that it is not the same as US origin or Canada origin or Mexico origin. And the last term that people often try to lump in with these other two is the phrase made in USA. That is administered by the Federal Trade Commission, the FTC, and it has a different standard that is applied by a different entity, a different agency of the US, and it has no relationship to originating or country of origin, no direct relationship. There is a new rule proposed for the Made in USA standard that is currently being reviewed by the Federal Trade Commission, and I do expect to see new developments on that front later, but that's going to be out of the scope of today's session. I just want to put it out there that there are 3 entirely separate standards. We are focusing on USMCA originating, the middle one on this chart here. Some of the key roles defined within the USMCA agreement itself. The parties, anytime you see the term parties within the text of the agreement, they are talking about the member countries, Canada, Mexico, and US. They are not talking about the parties to the sale. They are not talking about the parties that are listed on the certifications. They are talking about the member countries. So anywhere you see the parties in the text, they mean the actual member countries. For the actual transactions and for the certifications, they have the roles of certifier, producer, exporter, and importer. And the certifier is identified as the entity who prepares and signs the official certification. And this is going to be either the producer, the exporter, or the importer. Producer is also known as the manufacturer. Exporter is going to be the entity delivering the goods to another party in a different member country. And generally, this will correlate with the US PPI that's defined in the export regulations, the foreign trade regulations under 15 CFR 30.1. Importer, by contrast, is the entity receiving the goods from another party in a different member country. And generally, this is going to be the FPPI defined in the foreign trade regulations. The agreement does not define the roles or responsibilities for entities like brokers or forwarders, suppliers, distributors, resellers, or any other third party if they're not also either the producer, the exporter, or the importer. So it's important to recognize the limitations of the parties within the USMCA, as well as the people that do have a direct responsibility. And one of the other key concerns when looking at the framing of the USMCA is understanding the role of the HTS, the Harmonized Tariff Schedule. HTS is the basis for application of duty worldwide. Virtually all countries share that same first 6 digits, and then they add digits beyond those first 6, and those extra digits will determine the application of duty and statistical reporting requirements. An accurate HTS is an absolute prerequisite for USMCA certifications. You cannot do USMCA without accurate HTS. The US and Canada use a 10-digit system. Mexico uses an 8-digit system. In the HTS US, there are more than 18,000 classifications. If you don't have a reliable process for determining your classification of goods, then you're not going to be able to execute your certifications correctly. You're not going to be able to follow the rules of origin correctly. So it must be part of your approach to USMCA to obtain, determine accurate, reliable HTS classifications. Quick note that the Schedule B and the HTS US are different schemes. They are both based on the HTS, the 6 digits, but Schedule B is used for exports while HTS US is used for imports. There's a little bit of nuance to that. I'm not going to get into it, but it's important to recognize that a Schedule B and an HTS US are not the same thing. Schedule B only has about 9,000 classifications, about half of what the HTS US uses. And whenever you're preparing your USMCA certifications, you should be including the HTS only up to the 6-digit level, since that is the universal, and these certifications are intended for use by other customs authorities, other countries. Also, we will not be learning how to classify in today's session. That's an entirely different field of study and frankly, far more complex than USMCA in my opinion. But If you do have interest in understanding how to classify your goods properly, if you recognize that that is a deficiency in your organization, absolutely get that shored up. You can reach out to us for more information. We do free webinars on classification, and we can talk to you and your organization about what your limitations or challenges there are. Okay, we're gonna have a quick look at the contrast between USMCA and NAFTA. On paper and in practice, these two agreements are very, very similar. There are not any major fundamental differences between the organizations that would make it so that you could not take advantage of USMCA if you were already taking advantage of NAFTA. But there are some special inclusions that are addressed within the agreement that have some play for various industry sectors. We're going to talk about the concepts of tariff shift and regional value content, what has changed, what has stayed the same, and how they work. We'll look at the de minimis rule, and then we'll take a look at some of the chemical and plastic rules, which are very, very different from NAFTA, as well as the automotive rules, which have a kind of a difficult implementation. We will not be going into super deep depth on either of those two categories, but we will touch on them briefly. So the special inclusions, these are part of the act of negotiating between these three countries. These are priority issues that all three countries came to an agreement and an understanding on how to provide, in the first case, protections for specific types of industries. We have small and medium enterprises, the agricultural industry, automotive, textiles and apparel, and telecommunications. Obviously, these are hot button issues that have been debated for decades between US, Canada, and Mexico and around the world. So they are going to have a special inclusion here. There are particular sectors that get special consideration, particularly intellectual property. That is a big deal for US interests, as well as the distribution of investments and financial services across those borders between those countries. And then there are side letters that are between usually two of the parties, two of the member countries, that deal with the Section 232 aluminum and steel tariffs, auto safety standards, energy, and R&D expenditures, as well as environmental cooperation. All these have special considerations that are baked in. If you're in any of these industries, I would highly recommend researching these sections and ensuring you understand how those special inclusions might make your roles and responsibilities a little bit different than the average participant in USMCA. Okay, tariff shift. So under the USMCA, goods are going to continue to qualify using the same two basic methods used by NAFTA and other free trade agreements. Those two methods are tariff shift and regional value content. When I use the term tariff shift, I'm talking about the concept that a good transitions from one article in the HTS to another article in the HTS. At its basis, that's what tariff shift means. It is a different article because of some act of manufacturing or a combination with other raw materials. Tariff shift can happen at different levels: the chapter level, the heading level, or the subheading level. For those of you that are not familiar with the HTS, I would strongly encourage you to bone up on your understanding of the differences between chapter, heading, and subheading levels of the tariff. I'm not going to be going into too much detail on that today, but recognizing that there are different layers, chapter being the first 2 digits, heading being the first 4 digits, subheading being the first 6 digits of the HTS, it's important to understand how those come into play when reading the tariff shift rules. And then lastly, you'll have the phrase meet the shift. And that means that a particular good has transformed at the appropriate tariff level in order to meet the origination requirements under the USMCA. If a good is said to have met the shift, that means they have met that shift rule, that tariff shift rule. And so we're going to take a look at some of the tariff shift examples that exist. I've got broken up into 3 segments here: chapter shift, heading shift, and subheading shift. And these can be represented in the USMCA in different ways. Here's 3 examples for chapter shift. We can have something as simple as a change to heading 7201 from any other chapter. If it's not chapter 72 and it becomes chapter 72, then it is said to have met the shift. And then you can have a little bit more specific with still being chapter shift, but being a little bit more particular on which HTSs are meeting that chapter shift. And this is a change to subheading 720211 through 720260 inclusive from any other chapter. So again, if it's coming from a chapter outside of 72 into one of these subheadings, 7202.11 through 7202.60, then it is going to meet the shift. And we're going to take a little bit of a look at this next one here, which is 7202.70, which is the tariff classification for ferromolybdenum, which is the USMCA rule is a change to subheading 7202.70 from any other chapter except from subheading 2613.10. That's the rule in the USMCA. And if you go and look up the tariff classifications, again, 7202.70 is ferromolybdenum, and 2613.10 is molybdenum ores and concentrates roasted. So they're saying that there is not a substantial enough transformation from those roasted ores and concentrates to become ferromolybdenum to meet that shift. So you can become a 7202.70 from any other chapter unless you're coming specifically from subheading 2613.10. Hopefully that was clear. Again, if there's questions, feel free to type them into the question answer box. I will get to them. Heading shift. Heading shift is basically represented by the text here. We've got a heading of 7206 to 7207, a change to those subheadings from any heading outside that group. So if you have a 7204 and it becomes a 7206, you've met the shift. If you have a 7206 and it becomes a 7207, you have not met the shift because that is within that group. That's how the heading shift works. And then an example of a subheading shift here, a change to subheading 4012.11 through 4012.19 from any subheading outside that group. And again, outside that group, 4012.11 through 4012.19 is inclusive. So you cannot have a 4012.12 become a 4012.14 and meet the shift. You have to come from outside of that group. And it does include 4012.19 within that group. Hopefully that kind of paints a clear picture of the tariff shift. Because now we're going to look at regional value content. And again, the two primary rule baselines for USMCA, just like NAFTA, are tariff shift and regional value content. So the calculation methods have not changed between NAFTA and USMCA. You still use the transaction value method or the net cost method, represented by the equations that you see on your screen there, where VNM stands for the value of non-originating materials. So you take the transaction value, subtract out the non-originating materials, and divide that by the transaction value again to get the percentage of regional value content of that finished item. Even though the calculations have not changed, some of the thresholds may have changed. For example, under NAFTA heading 4005, you needed 60% transaction value or 50% net cost. But under USMCA heading for 4005, you can use 35% transaction value or 25% net cost. So there could be different values than what you were using before. Generally, these are going to skew to be more advantageous under USMCA, easier to hit those thresholds than they were under NAFTA, although I can't say that across the board that will always be the case. And absolutely, you want to be sure that you're reading the section, heading, and tariff item notes before looking at the HTS item for qualification. They will include particular restrictions or additional considerations higher up in the rules of origin under the USMCA before they actually identify the specific rule. So you always want to make sure you're reading the text before you're just jumping ahead to the specific tariff item level in the USMCA rules of origin. So here's an example of a regional value content calculation. We're going to look at the USMCA rule on a B12 vitamin supplement that's classified under HTS 300450. The rule says a change to heading 3004 from any other heading except from heading 3003, so it's a tariff shift rule, or no required change in tariff classification to heading 3004, provided there is a regional value content of not less than 60% transaction value method or 50% where the net cost method is used. If we take a look at the middle portion of this slide here, we've got a bill of materials on our B12 vitamin supplement, and a hypothetical bill of materials has some water classified under 220190 coming from Japan, valued at 12 cents, some vitamin B12 coming from the US, classified under 293626, valued at 41 cents. And then there's some ground powder of 300450 from Italy, valued at 63 cents. And lastly, we've got some US labor and overhead of 34 cents. So we take this bill of materials, this is a baseline simplified representation of a costed BOM. And we run some calculations by looking at, first we look at whether or not we met the shift. And in this case, we have some ground powder under the same heading, 3004, in fact, that does not meet the shift. It comes from Italy. It cannot be considered to be originating under the USMCA because it's not produced, it's not defined as originating under the USMCA being produced in US, Canada, or Mexico. So we cannot use the tariff shift rule, and we need to look at the regional value content calculations in order to determine if we're going to achieve certification using those methods. So the material cost for these four components add up to $1.50. The sale price, after you add on a 20% profit, is $1.80. We can use either of the two regional value content calculations to determine if our good is going to meet the threshold required. And under USMCA and under NAFTA, you get to use the one that is most favorable to you. So in our example here, we use the transaction value method to subtract out 75 cents from $1.80, divide that into $1.80, and achieve 58% under the transaction value method. That is lower than our 60% requirement in the rule above. So we cannot qualify for USMCA using the transaction value method. So we don't qualify on tariff shift, and we don't qualify on RVC transaction value. Our last option is looking at the net cost method. And here we take the total value of the raw materials at $1.50, subtract out 75 cents of foreign content, non-originating material, and divide that into the $1.50 material cost, and we achieve 50%. That is the threshold for the net cost method, and therefore we do qualify for USMCA because we have met that requirement. So even though we didn't pass on two of them, we do pass on one, and we can consider our finished good, our B12 vitamin supplement, to be eligible for USMCA. There's a lot of numbers, a lot of words on this slide. Feel free to take a look at this after the session as well, just to break it down again. There are a lot of questions about using the de minimis rule to your advantage. And the de minimis rule does allow basically for the exclusion of non-originating materials. The rule as written states, the value of all non-originating materials used in the production that do not undergo an applicable tariff shift according to the product-specific rule is not more than 10% of the transaction value of the total cost of the good, provided all other requirements are met. So you can actually eliminate up to 10% of non-originating content that does not undergo the tariff shift rule. And that 10% is a value increase from 7 under NAFTA and now 10% under USMCA, which makes makes it easier for you to qualify for USMCA than you had under NAFTA. There are limitations to how you employ this rule. First of all, you have to add up all of the non-originating values prior to determining whether that 10% threshold is met. So you can't just cherry pick which ones you want to de minimis out because they're below 10%. So I don't want to count those ones. You need to count the entirety of your non-originating materials. And there are some restrictions and limitations on how to employ the de minimis rule to correct effect. Those rules are spelled out in Annex 4A. And there's an example here, 4AK says, any non-originating materials that do not change at the subheading level may not be counted. So there's limitations to the use of this 10% that do make it a little bit more challenging. It's not really different than it was under NAFTA, but it is spelled out a little more clearly. And if you want to take advantage of this rule, you have to be very, very diligent about how you're employing it. Generally speaking, I would say de minimis would be a last resort rule. For example, in our previous example, if our net cost threshold was just below the 50% method, then I might consider trying to use the de minimis rule, but I would always try and qualify without using de minimis first and foremost. So in the USMCA, they introduced 8 different chemical and plastic rules. They apply to sections 6 and 7 of the tariff of the HTS, and they cover products of the chemical allied industries defined within chapters 28 through 38 of the HTS, as well as plastics and rubber and articles thereof defined in chapters 39 through 40. Not all 8 of these rules apply to all classifications in there. Definitely read those notes that I mentioned earlier, because it will specify which ones you're allowed to use and in which circumstances. Under these rules, or with these rules, if you meet the chemical reaction rule or the mixtures and blends rule or any one of these, you have a presumption that your good is originating under NAFTA, even without having to look at the regional value content or the tariff shift requirements. So these rules actually create more opportunity for you to become eligible. If you do not meet these rules, you can still use the tariff shift or the regional value content rules that are specified at that tariff item level in the rules of origin. This just gives you another vehicle to get there, even if you may or may not meet those specific rules. One of the important things, if you're going to take advantage of these chemicals and plastics rules, is your record keeping practices need to be adjusted to accommodate the use of these rules. If you don't have the evidence or substantiation on how you met the rule requirements, it's as though there's that presumption of non-compliance, there's a presumption of non-qualification. So it's as though you don't have any proof that your claims are accurate. You need to actually have records that show why you meet those rules. And then the automotive rules are very, very dense. It would have to be several hours of talking really to unpack how these work. But do note that the appendix to Annex 4B contains the provisions related to the product-specific rules of origin for automotive goods. It generally applies to headings 8701 through 8708. There are other parts of the tariff that do refer to the automotive rules. Things like rubber for use for tires can have some automotive rule implications. So make sure that you're thoroughly reading the rules as written and referring to this Annex 4B. Unlike with the other USMCA rules, your product description and its use in commerce may carry more weight than the HTS classification alone. For most rules within the USMCA, the tariff classification is going to be your gospel. But when it comes to automotive, how your product is used in commerce may have a superseding rule under these automotive restrictions. There are also a sliding scale of implementation. There's a 3, 4, and 5-year targets for implementing increasing value thresholds for RVC, ensuring that countries have time to implement certain requirements in order to promote production within the member countries. So today, the threshold for how much regional value content you need for certain items is less than what it will be 2 years from now, and 3 years from now, and 4 years from now, eventually reaching that max at that 5 years after implementation threshold. Again, read the text thoroughly. The Annex 4B starts on page 224 of Chapter 4 of the USMCA. And again, there's a link to the USMCA Chapter 4 on the bottom left. If you're in the automotive industry, absolutely start by reading that text thoroughly. And then there are 7 supplemental tables, A through G, that outline the subcomponents by HTS and their use. So that's a place that you would refer to if you have a good that has multiple uses that may be used for automotive purposes. And there are references to headings from chapters 40 through 94 contained within those the supplemental tables. Okay, before we begin the next section, I want to introduce everyone to our trade compliance scorecard. This is one of the tools that we are finding to provide a lot of value to organizations by identifying gaps in trade compliance programs and providing a contextualized scorecard and an action plan that helps them target progress in critical areas. The field of trade compliance is massive, but using this approach, we found that we're able to target specific improvements that provide meaningful progress in specific areas that are important to the organization. And again, there will be Q&A at the end of the session. So if you have any questions, make sure you get them submitted. I see there's one in there already that we will tackle for sure. Okay, part 2. Working with the fundamentals that we've just kind of laid out on how the USMCA works generally, we're going to take a look at some of the actions that come into play that will help set ourselves up for success. It's important to really have a good plan in place so that you can work the plan, because without having that organization and that mindset of approach in a linear fashion and a clearly defined roles and responsibilities, it's way too confusing to try and bite this stuff off. So I find it extremely helpful to be able to map out internally what steps we need to take, what sort of external communications we need to have with our supply chain, what sort of requirements that we know that we're going to need to meet. So we have to gear our efforts towards those substantiation rules, and then knowing what our output is going to look like, what our certification is going to end up when we're all done, if we've done it correctly. These are very humanized elements of executing a USMCA strategy. And the first step to that is internal preparedness. Stage one is prerequisites. You need to have appropriate training and practical knowledge across your key departments, knowing what is supposed to happen, when it's supposed to happen, and how it gets done. You've got to have your HTS classifications. If you don't have good HTS, if you don't have good methodology for your HTS, you're flying blind. And you've also got to know where to find the relevant text of the USMCA. Every company is different. Every set of goods manufactured, every process for obtaining the raw materials and manufacturing your goods is different. You need to refer to the rules as written and know what you're supposed to do before you try and implement those strategies. You could obviously be doing way more work than you need to, or not doing, which is way worse, not doing critical work that is important to the success of your USMCA program. Once you've got your baselines in place, you now know what you need to communicate to people. And you start with communicating with your internal teams. This is talking to your sales and customer service teams. You want to approach these individuals. They're often going to be the front line with customers that need USMCA certifications, and you're going to need to empower them to communicate effectively. You need to talk with your purchasing teams, your production teams, potentially your finance teams, and absolutely your trade compliance teams, or your logistics and transportation teams, so that they know what to look for and how to respond to inquiries that are coming from often many different angles. And you need to be able to then take that communication and allocate proper roles and responsibilities to those individuals within those areas. It requires dedicated attention, if not dedicated resources, for soliciting information from your suppliers, managing your inbound customer requests or your broker's requests, qualifying your products, ensuring that you have the proper substantiation, distributing your certifications and keeping records of what you said and to whom, and then solving the problems that come up. Like everything in life, like everything in work, there is always going to be a problem. If you don't have the resources to navigate through those problems, then you're going to have issues. Problems can range from upset customers to confused suppliers to customs asking questions. Having Mexico Customs send you a questionnaire can be a very daunting task, because they want very specific information. And if you don't have the resources aligned or assigned to navigate through those requests, you're going to find yourself in a bad spot. And then lastly, once you've got all these steps kind of in play at your organization, you want to focus on your execution. That means review, audit, and repeat. Make sure that you're all following the right steps, that you know that those steps are effective, and that you just execute year after year after year. Once you've got your internal teams and resources aligned, you need to move on to looking at your supply chain. You definitely want to be coordinating with your suppliers, including your distributors and resellers, both foreign and domestic. You want to have a curated list of who you're going to be contacting and for what purposes. Use the 5 W's and how. Who am I reaching out to? What's their role in the company? How do they tie in with the USMCA process? What items are we buying from them? What role do those items play in our production process? How important is their information to our USMCA certification for the products that we manufacture? You want to have very clear introductory notifications to your suppliers, letting them know this is why you need this is why it's important to us, this is how we're going to help you comply with our request. And you need to have detailed, clear requests and supporting data. Many suppliers have a hard time, well, they certainly don't use the same numbering scheme that you use. So you're going to have to be able to translate what you're asking for to what their systems have and where that data lives. And you need to be part of that process. Otherwise, you're going to find yourself in a position where you've got some data back from your supplier, but it doesn't tie to the data that you need for USMCA. And you cannot claim USMCA without having that substantiation that you're supposed to have on file and making sense. So the better you can communicate, provide their part numbers, provide purchase order data, provide purchasing histories, dates, things like that. It helps them identify what it is you need. So you want to make sure that you're part of that help. and you absolutely want to follow through. A lot of suppliers do not respond to the very first request, and it's not because they don't like you, it's because that they have their own process of needing to obtain information from their suppliers. And it's a daisy chain effect. And you need to be patient with your suppliers, but you also need to follow through and make sure that you're clear on what you need, and they have all the tools and resources that they need in order to accomplish what you're asking of them. And that introductory notification really helps sell that need. Your customers, meanwhile, they're going to want to see that you've acknowledged their request. You're going to want to manage their expectations. If you're 3 months out from being able to issue your first certificates, tell your customers, hey guys, we're backed up. We're working on this. This is absolutely a priority for us. Our scheduled date for certifications begins on December the 1st, and you can expect your certifications sometime within the month of December. Be clear on and absolutely definitely meet those expectations that you set. If you set expectations and you don't meet them, that's going to create other issues. And be clear on what it is that you're going to be doing for them, or what you're providing them, so they know that they're getting what they need. Using their part numbers, again, is another way to help avoid that back and forth communication of, what is this part? I didn't buy this from you. Well, you did. We call it this, and you call it that, and your description matches this. Try and be as clear as you can, and again, follow through. Brokers and third parties, as an importer or exporter, you definitely want to be the initiator. Brokers and other third parties do not have the same onus that you do as a certifier. If you are a producer, exporter, importer, the priority lies with you, and you need to communicate and initiate that communication with your brokers and service providers that are in that supply chain. So you say, this is what I'm going to provide you. I need you to put this in your systems. I need you to provide me this information back, whatever it is. But you want to be the initiator and have inclusionary practices. Most organizations are doing their best to work with you. But if you have an antagonistic approach, it can yield very, very negative results, and it can lead to breakdowns in your supply chain and possible non-compliance, or failing to claim things that should have been claimed, or claiming things that should not have been claimed. So you want to make sure that you're working together. And again, these third parties are made up of humans, so you definitely want to review, audit, and correct, and communicate what you're finding to them, so that there is appropriate accountability. And then implement SOPs and continuous improvement towards those ends. Software and automation, the biggest limitation here is garbage in, garbage out. If you don't have the right mechanisms for storing or tracking or auditing the information, then you're never going to be able to identify whether or not your claims are wholly accurate or substantial or provable in the grand scheme. One of the biggest limitations I've seen with software, particularly with the introduction of USMCA, is the limitation on expired data. Not all softwares will adequately handle the fact that the claim that you got from your supplier was only good through the end of December, and you don't have new information in your system. But meanwhile, you've been making your claims without any knowledge all throughout the course of the year. And when you go to ask your supplier again, like, oh no, we changed our supplier. That's now coming from China. It's no longer eligible for USMCA, and that can have a cascading effect on all the claims that you've made previously, all the customers that you're selling to. There can be big problems from that expired data if you're not keeping up with those renewals. For substantiation, you absolutely will need that valid HTS. These are the cornerstone. You need documented, accurate determination practices. You also need that relevant text of the USMCA. Find, read, and apply the rules. Notice if you qualify for one of the chemical rules, or if you need to have a tariff shift or region value content threshold met, or both. Are your automotive goods covered in Annex 4B? Are there any special provisions for use within the USMCA? Be aware of the text of the agreement and any special provisions that might exist. They can either make your job easier or harder depending on what the rule says, but you want to know that they exist. And then the substantiating evidence, knowing that your components are originating is not enough. You must have that substantiating evidence in hand at the time the claims are made. This is your evidence that the product meets that rule of origin. If you don't have that information in hand, there is a presumption of non-compliance, and it will not hold up to scrutiny. Some of that evidence might include, certainly not limited to, a cost of bill of materials, supplier certifications, the evidence or methodology that you use for meeting those rules of origin. certificates that you've issued to your customers over the years. You need to maintain your records for 5 years. Do you have financial verification of the payments made and collected? Production process information, commercial invoices and records along those lines. You want to make sure that you've got that document trail in place that you can just refer back to it and be able to cite, this is why we made this decision. And lastly, the certification step here. USMCA certifications do not have a required form. This is one of the changes from NAFTA. Form 434 is no longer necessary. It's no longer part of the equation. You can use any format or form that you want as long as you have the minimum data elements identified on there. CBP does produce a generic certificate of origin for multiple free trade agreement types. You can download it from the link on the bottom of the page here. Again, when I send this out, you'll see that. They most recently updated it in August of 2020. It is terrible. I don't recommend it. It does exist, and you can use it if you want. Certification may be provided on an invoice or any other document. The rules as written say that you can provide the certification status on an invoice. I don't recommend using these invoice-based claims. The data elements that are required are generally not part of your standard commercial invoices, certainly not your packing lists or your bills of lading. So it's often not worth the trouble of changing your entire invoicing structure to meet the USMCA requirements versus just having an additional document that you use for the certification process. But on paper, you can use the invoice. We'll look at the minimum data elements here on the next slides. So we'll take a look at those. Certification documents may be completed by the exporter, producer, or importer. If you are not one of those, you need to question what your role is in the transaction. So also note that importers have special proof requirements that are spelled out in 5.2, 2A through D. Take a look at those if you're claiming as an importer. You may use any language, but it needs to be translated. And then the last one I want to kind of put a fine point on here. Digital certificates with electronic signatures are valid according to the text of the USMCA. Electronic signatures are not a picture of somebody's signature. It doesn't mean that they signed their name on a piece of paper, you scanned it in, you cropped out their photo, the photo of the signature, and dropped it on a piece of paper. That's not electronic signature. Electronic signature or digital signature is an encoded fingerprint embedded in the document that verifies its authenticity. This is stuff like blockchain. There's ways to prove the chain of custody of electronic documents, and electronic signatures are considered acceptable, but most places don't have that in place today. And it's not worth spinning this up just for USMCA, in my opinion, versus just using ink and paper and making a scan and issuing a document that way. A picture of a signature is not electronic signature. That's the main takeaway there. Okay, minimum data elements. You must identify whether the certifier is the exporter, producer, or importer. You need to include the name, title, address, phone, and email of the certifier, exporter, producer, and importer, with some exceptions. Your blanket period can be up to 12 months and must have an authorized signature and date. You must include product information. This includes a full description and HTS classification up to 6 digits. The origin criteria should be specified as outlined in Chapter 4.2 under originating goods. And you must have a statement of certification. I certify that the goods described in this document qualify as originating, and the information contained in this document is true and accurate. I assume responsibility for proving such representations and agree to maintain and present upon request or to make available during a verification visit documentation necessary to support the certification. These are the minimum data elements, kind of nutshelled. You can see them spelled out in Annex 5A, called minimum data elements. And again, you can put these on any format of document that you want, but that document must contain all of these things. Okay, before we jump into the last section, I do want to mention that our customs broker course will be resuming here in late July, early August. If anybody's interested in getting their customs broker license, our program is awesome. I took it many years ago. We have a fantastic instructor, Joe Harper, who administers the course. A lot of it is delivered, actually all of it's delivered electronically now. So there's a lot more availability. So if you're interested in getting your license, definitely look us up after the session here. And there's a link on this slide that you'll be able to click. Okay, For the last part, start to wrap up, I want to give you some last tips, address any questions you might have, and then we'll be on our ways. Some tips and best practices here. Modifying documents. If your product is not eligible for USMCA, you do not have to issue any sort of document one way or another. However, it's very helpful to your customers or your brokers to issue a non-certification statement that provides the HTS and origin and state that the goods don't qualify. Be clear that that record is way more reliable than having no record at all. So you definitely want to make sure that you're addressing your customers' requests by providing them something, even if it's not what they necessarily want, but it is true. You have that record that you did give it to them. If you're not the exporter, you want to include a statement on certification that it is not to be used for exporting to another country. You can remove that exporter field entirely. Remember, for the USMCA, a valid USMCA certification, the certifier needs to be an importer, an exporter, or a producer. If you're not one of those three roles, you probably should not be providing the official USMCA certification. And certainly you should not be using it if you are one of those other players, getting those from a reseller or a distributor. Expectation management, provide your customer service teams with reasonable tools to respond to impatient customers. You will have impatient customers or brokers. I've noticed mostly on the Mexican side of the border, they have very particular requirements, small changes that need to be made. That's okay, that's part of the process. And you want to be able to give your teams enough knowledge and understanding that they can navigate through those conversations without making people upset along the way. You want to give adequate notice to your suppliers and also your internal resources to complete requests. Manage your customers' expectations through open communication. Look, if you told them December 1st and it's now December 3rd and you haven't said anything to them, you probably need to reach out and say, guys, we're still working on it. It'll be ready as soon as possible. I apologize for the inconvenience. It goes a long way. Blanket periods. There are 2 active blanket period cycles happening right now with USMCA. I don't love it, but it does exist. We have January 1st through December 31st, the standard calendar year. And since USMCA went into effect on July 1st, we now have a July 1st through June 30th cycle period. This puts a tremendous onus on tracking for compliance purposes because you may be on a calendar year cycle, but your suppliers are on that mid-year cycle and your certifications expire and you don't have new documentation in hand during the middle of the year. You want to make sure that you're tracking these dates with accuracy and that you're following through on the information that you're providing. Also, get help. There are plenty of resources out there that can and will provide help, including companies that do full stack support. We're one of them. We provide classification, solicitation, qualification, customer request management, post-entry refunds, 520Ds. All that's part of what a full program looks like. And you need to have the resources to do that. If you don't have the resources now, but you want to take advantage of USMCA more fully, you need to get help from outside. And if you don't want to hire out, then you need to train your people and keep them updated and give them the resources, meaning time, to do the work properly. If you don't give them the time, there's no way they're going to achieve with any sort of reliable success. And you can find yourself in a position where you are have been non-compliant for years, and you now need to explain this to a federal agency. So you definitely want to provide people with the adequate training and resources to do their job correctly. References here that I used throughout the presentation are kind of condensed here for your reference. I'm not going to go through all of these, but you can use these after the fact. Okay, questions. I will answer a few questions from past sessions as well as any you may have. I see some in the chat box here, but please feel free to use the training@startusa.org email address for questions after the session. I'll be happy to answer those. I will stick around until all of these questions are answered, but I am going to, actually I'll stay here for a second. Okay, so one of the questions here is who is liable for claims? The importer is the first liable party. The importer is the one responsible for making the claim to their customs agency for the benefit of duty preference at the time of importation. So the importer has that first chain of liability. And then based on how they substantiate their claim, that responsibility passes up the chain. And you can refer to articles 5.4, 5.6, and 5.8. But effectively, if an importer bases their claim on an exporter's valid certificate, who base their claim on a producer's claim, it's going to pass all the way up the chain to the producer. So you want to make sure that you have your ducks in a row. How does a company best handle filling in the form and the needed background information on the item being sold is not easy to obtain For example, where parts are manufactured, where are parts manufactured, and what is their value or HTS code. So if you don't have the information, if the information is too hard to obtain to make your certification, you don't make a USMCA certification. USMCA is optional. You do not need a USMCA in order to cross the border. You may need it to keep your customers. That's a different consideration, and in which case you need to have your supply chain working with you, your suppliers, whoever's involved in that procurement process. They need to provide you the information that you need to have, and it needs to be true. If your supplier is sourced from China and your customer needs a USMCA eligible product and you can't get there, you need to change your supplier. You cannot just claim USMCA because that's what your customer wants. So, and you need to have the proof that backs up your claims. If I'm just a reseller, can I provide a USMCA certification? So yes, resellers can convey the fact that a good is eligible if you have a valid certification from your supplier. Just remember that any claims to customs are to be made by the exporter, producer, or importer. And if you're not one of those, then you want to make sure that one of those parties is responsible for preparing that valid USMCA certification. So if you're just a distributor and you're neither the exporter nor the producer, then you need to convey to the exporter usually that they need to provide this documentation to the customer in the foreign country. Okay. Is there any additional information on how to qualify under the polymer content rules? Chapter 39 states a change to 3901 through 3915 from any other heading, including another heading within that group, provided that the originating polymer content of heading 3901 through 3915 is not less than 50% by weight of the total polymer content. So that's a very specific rule. I do have some familiar with the chemical rules. Basically, if the originating polymer content within that does not meet the heading shift, the 3901 to 3915, if it's within that group, then you cannot have it be less than 50% by weight originating. So if you've got 44% non-originating polymer content and 56% originating polymer content, then I think you would meet that rule, that not less than 50% by weight of the total polymer content. I would have to see a bill of materials to know how to answer that more accurately. I have a vendor who refuses to include country of origin on the USMCA blanket cert. It's technically not a required field. Do you agree? My broker insists the country of origin must be on a cert. The vendor does include it on the CIs when they ship to us. Country of origin is not one of the required data elements. I believe it's an oversight. As a human who works in the field, I would absolutely include the country of origin because it helps frame out the accuracy of the document. And particularly if you're already providing that information, there's no reason not to. I agree with you that they should not do that, but if they are, the only way to get them to change that practice is to work with them and understand why they're doing it that way in the first place. Even if it's not a required data element on the certification, it's just way more helpful to have that there. So I would encourage a conversation with them in as constructive a manner as possible. We have a corporation that owns different companies, and there's one department that does the USMCA for all companies. Does the name of the certifier company need to be the same as the signing company? Okay, so that is a question that deals with the transacting customs business possibly without a license, which runs in violation of 19 CFR 111. One entity may not represent another entity without certain protocols and provisions in place. And I've had to navigate this with several clients. USMCA is considered customs business, so is HTS classification, so is the valuation of goods and merchandise for import purposes. If somebody is transacting customs business on behalf of another entity, there have to be certain protocols and protections in place. And the name of the certifier and the company that they work for is relevant because it can come into play with the simple question of what right does this person working for this company have to claim the USMCA status for this other company? And without specific protocols in place, there are customs rulings on this. I've got a whole chart of what you need to have in place. I'm not going to bust it out here, but it is actually a very in-depth question. If you don't have those protocols in place, then you are said to be transacting customs business without a license. So that could be a problem. Feel free to reach out to me after the webinar, and I can try and dig up some information for you. Are there questionnaires available yet that customers will send in orders and verification? I have not seen one for USMCA yet. I have seen several for NAFTA. I imagine that the questionnaires will be very, very similar to what they use for NAFTA, but yeah, I haven't seen one that's specific to USMCA yet. So it's a good question. I'm sure that they have them. I'm sure that they're not that different. They're going to ask for your certification process. They're going to ask for your production efforts. You know, what goes on. How do you prove that your good is originating? Provide us the documents from these transaction dates. That sort of same basic setup. So I wouldn't expect anything different from NAFTA verifications. So who can sign USMCA? Does the person signing it need some kind of power of attorney? Power of attorney is needed for a licensed customs broker to sign the certification. If you're an employee of one company who is working with other divisions of the company, there are protocols for identifying that this person is considered an employee of that company. So one of those protocols could be a delegation of authority. It's not a power of attorney, but it's a delegation of authority. Another one of the factors that influences that is how their salary is derived. If their salary is wholly derived from one company and the other company is not contributing, that is a presumption that they are not an employee of the other company, and therefore they cannot represent that company. So yeah, there's several checks and balances that you have to have in place to actively represent a different importer or exporter. Okay, that looks like, oh, there's another question here. Documents signed by EcoSign are okay as electronic signatures? Potentially, depending on how the EcoSign system handles their electronic signature process and how that document is provided to the recipient. One of the big problems I see with digital signatures, quote unquote, when you have a software that does do electronic signatures correctly, and it creates that verifiable blockchain evidence that the document is legitimate, people will just print that to PDF and then send that printed PDF document, which breaks that authenticity chain because it's no longer operating within that environment. If you happen to provide that electronic document with the electronic signature through the software that does maintain that chain of custody, then it should be, that electronic signature should be intact and should be valid. Most people tend to just break that through normal practice. They'll just print it to a PDF or save it to PDF separate from the system where it's made, and then email that off. And when you do that, the chain of custody can be broken. Okay, that looks like all the questions. Whoops. Follow-up questions are welcome. Thank you guys all for your time. Send your follow-up questions to train@startusa.org. When the webinar ends, you'll be taken to a feedback section. Please feel free to complete that. If you have CCS credits, you can send those to train@startusa.org. Again, thank you all for your time. I've been Mike Easton, and I appreciate your attention. And close out, if you do have internal training needs on any trade compliance matters, we hit a lot of different fronts. Feel free to reach out to us. I really like educating. I've been providing training on these topics for pretty much any industry. I have a passion for supporting education wherever possible. I guest lectured at Ohio State University, Cleveland State, Youngstown State, Case Western School of Law, many industry groups nationwide. We do train clients on doing everything that we do. So if you need more training at a more tailored level, please send us an email to train@startusa.org. I see a hand raised in the chat. Oh, here's a question in the chat. If we are a distributor and get a USMCA cert from the manufacturer, can we pass it along as is? You can. A lot of times, so repeat that. If we are a distributor and get a USMCA cert from the manufacturer, can we pass it along as is? Yes. If it's done by the producer, you can provide that as evidence to the buyer. Most cases, distributors and resellers don't want to reveal their suppliers, and it's generally not the best practice. But if it's a valid certification, an importer can use that as the basis for a claim. I think if I were in that position, I would let my supplier know that I'm going to be using their cert to give to my customer. I think it's bad practice to expose the supplier to compliance risks that they may not be aware of, but they are making the claim, so it's still valid. And I think I saw a hand raised, but I don't know what went. All right, thank you all for your time. I appreciate your attention. And again, please use the follow-up feedback thing for letting us know how we did. All right, have a good day, everyone.